Hi, everyone. This is Jason Burak of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a first-time guest. I've followed his work now for a couple of months. I really enjoy his videos. I think he does a good job of explaining, very technical stuff in layman's terms so people like me can understand it who don't have his background. He has over 10,000 subscribers on his YouTube channel. He's a money researcher focused on Bitcoin, Ethereum, and platforms like Bitgold. He's also publisher of the Deep newsletter, and he's the host of the David Seaman YouTube channel. David Seaman, thank you for joining me.
Thank you so much for having me on, Jason.
Now, David, for our listeners who are not familiar with you like I am, what's your background and what got you interested in cryptocurrencies, Bitcoin, Ethereum, and Bitgold?
Yeah, I was a journalist and a reporter covering first personal finance and then national security topics for a while, the NSA and NDAA and all that stuff. And then eventually looped back into an interest in personal finance. And I kind of wanted to figure out, why is money so messed up? Why is it that millennials are not getting ahead? Why is it that our parents' generation collectively is not doing all that well? What went wrong, essentially? And so I applied a lot of the same tools and a lot of the same research methodology and discipline that I had put into researching the NSA. Part of the reason why I developed a pretty big following is that I came out with pretty much what Edward Snowden was saying about a full year before he even came out. And I was basing what I was saying on just another whistleblower who had spoke to the New York Times, William Binney. And but eventually just got bored with that whole narrative. So as I became more interested in what's wrong with money, Bitcoin is something that kept coming up, at the fringes. People would say that this could be very significant. And this was back in 2012, early 2013. And what can I say? I just caught the bug. I got very interested in the idea of digitally scarce currency. And then only later, only after learning, as much as I could about cryptocurrency for several years, did I really get into gold. And I see gold as almost like the natural analog to what Bitcoin is trying to do.
Yeah, I think Bitcoin and gold complement each other because obviously you can't hack physical gold. But, we've heard cybersecurity experts talk about, we've seen cyber crimes and people's bank accounts are stolen. People get their stock accounts stolen now with identity theft and things like that. So physical gold, physical silver, I think they complement things like Bitcoin well, where the supply of these things is controlled, unlike, what these central bankers are doing in the US and Japan and Europe with, digital dollars, unlimited debt-based fiat currencies. If Ben Bernanke or Janet Yellen wants to hit a couple strokes on the keyboard, we just created another $1 trillion out of thin air.
Yeah, well, it's funny. Back in the Middle Ages, a lot of people, scientists, princes, con artists, pretty much everybody was interested in this idea of alchemy, of turning base metals into gold. And nowadays, there's plenty of gold and people know how to mine it. A number of gold mining companies are publicly listed and have a lot of investment. But what people don't know really is that gold is valuable money, and people don't know that voluntary forms of money like Bitcoin, that's real money. It's like people have forgotten what money was for 99.5% of human history. And so I like to tell people the real alchemy today is just educating other people. It's showing people that gold holds value incredibly well. It's showing people that Bitcoin is far faster and more efficient than a lot of these third-party clearinghouses and third-party trust silos like PayPal, where they're making things, marginally more convenient for the consumer and linking something to your email address or to your cell phone number. But in exchange for that convenience, you're paying a 2.9% fee every time you move that money around. And I've seen it, I've seen the statistic that if you have a $100 transaction and you send it to somebody using PayPal or another service like that, after 14 or 15 transactions, that $100 is gone. It's just totally eaten up by fees. And so that kind of, with Bitcoin, with cryptocurrency, there is not that loss of value. You can send somebody just 5 cents and suddenly it's economically feasible, or you can send somebody $1 million and incredibly, both of those transactions cost the same amount of money. So.
Yeah, unless you're an American citizen, then you have to keep track of the Bitcoin price when it's bought and sold, right? You have to account for the capital gains. That's the pain in the butt right now.
Well, I mean, I don't understand these guys who are like terrified of the prospect of reporting a capital gain. The upside to Bitcoin and the upside to newer networks like Ethereum is potentially quite large. So I don't mind paying a capital gain tax if one of these networks goes up 50x in the next couple of years, you know.
Hmm.
I'm happy to keep track of that stuff. But I think longer term, if we get to a point where hundreds of millions of people are using cryptocurrencies on a daily basis, which is entirely possible. I mean, that seems to be what the math suggests is going to happen. When that happens, you know, it'll become as some of the smartest people I talk to like to think of these things. It becomes a movement, you know, like currency, gold or Bitcoin or whatever it is, becomes an actual network of people who will start to lobby regulators and start to talk with local governments and say, you know, does it make sense for us to be paying a tax on what is, for all intents and purposes, absolutely a currency, you know?
Yeah, that's a great point, and we have started to see, Wall Street and especially Silicon Valley, and even some large corporations here in the United States, and also a few, banks like USAA and some of the larger ones. They're either making competing blockchains, or they're actually investing directly in Bitcoin and blockchain companies now.
Yeah, it's exciting to see. And I think, you know, just as gold is more accepted than other rare metals because it's just the one that has been around for the longest and has the best track record. I think that might be the case with Bitcoin, where if you're a bank who wants to launch a private blockchain and get your customers onto it, why would they want that when it doesn't have the 7-year track record and the, you know, relatively large acceptance profile that Bitcoin has? And what's funny is any kind of newcomer, any private blockchain is going to be unable to match the size of the merchant network that Bitcoin has, I think, because it's taken it so long to get there, you know. And then on the smart contract side, people keep saying, oh, well, Bitcoin will incorporate rootstock. And once rootstock is incorporated, then Bitcoin will have its own smart contracts. But meanwhile, I don't actually see a functional smart contract platform for Bitcoin. And even if they were to implement rootstock tomorrow, it doesn't necessarily make sense to layer things on top of a slow blockchain like Bitcoin's. So I know I'm kind of jumping topics here, but I think the first brand to really take over cryptocurrency will have value, and then the first couple brands to take over smart contracts. And if nobody's using your network, it doesn't have much value, right? So anybody could create, you know, a private smart contract platform, but and that's just a bunch of lines of code. You know, it's not something that has value. So.
It, exactly. And, if someone comes out with better coding than Facebook or better coding than eBay, but there's no one on there, doing auctions or doing social media, then there's not much of a point. They don't have the network effect, like you said. Now, you did bring up something interesting about Bitcoin. You mentioned some technical terms there of things that they're working on. A lot of the people that are anti-Bitcoin, besides people that say, oh, I only like dollars or euros or things like that, or gold bugs or silver bugs, they bring up the technical problems with Bitcoin. So what do you think are some of the technical problems Bitcoin does have in layman's terms? And, are these problems fixable?
Yeah, that's a great question. I interviewed on my channel recently one of the founders of Ethereum, which recently crossed $1 billion market cap. And that's the big smart contract crypto that some people are already saying could be a major competitor to Bitcoin. And so anyway, this co-founder of Ethereum, he said to me that the main problem with Bitcoin is not technological, it's actually a governance problem. You know, it's who's in charge. It's kind of similar to the problem that, and again, like I am not an Occupy Wall Street person, but it's very similar to the problems that Occupy ran into as they started to become more popular a few years ago, which is how do you run a movement? How do you grow a organization when there's nobody in charge, right? When anybody can just kind of bum rush a meeting and say what they want to say and try to take things in a weird direction. And that's what's happened in Bitcoin is you have all these different developers. Some of them are just glorified volunteers, glorified hobbyists, and some of them have, you know, like a cult of personality. They have big followings on Twitter and whatnot, and big followings from other developers. And so each of these guys has a vision for what Bitcoin should be. For example, some of the guys believe that the block size should be immediately increased, and that Bitcoin should be, all things to all people, start using smart contracts, start using more sophisticated features as soon as possible. And then there's another school of thought, which is that no, we should leave Bitcoin exactly the way it is. And if that means that transactions are going to start to get bumped because the blocks are full, then that's just going to raise the transaction fee, and it's just going to introduce a kind of competitive market for transaction fees, and that they shouldn't meddle with something that was created by a genius 7 years ago. So those are just two of the schools of thought. And then, there's everything in between. There's, well, we should introduce a medium-sized increase in block size for the time being, and then revisit things in a couple of years. But the problem is that nobody's actually doing anything, and I had a real problem with the core developer, Gavin Andreessen, because I think he's a very smart guy, but every media interview he does, he seems to bomb. Like, he says terrible things about cryptocurrency. And if I owned, let's say $100,000 or $1 million of Bitcoin, and I heard this guy talk, I would want to sell my Bitcoin, So those are the problems with Bitcoin, is who is actually in charge? Where does the buck stop? Versus newer models like Ethereum, where who's in charge. It was created by this well-funded Swiss foundation, Stiftung Ethereum, and who the creators are. I've actually emailed them before when I have questions about how something works, and they do media interviews, and they travel all over the world and go to fintech conferences, and they have meetings with banks. And so, at the end of the day, as cynical as this sounds, if everybody loses their money on Ethereum, at least we know whose door to knock on. At least we know who to sue, right? Whereas with Bitcoin, that level of trust doesn't even exist. It's just a bunch of volunteers arguing with each other. And not to totally disparage Bitcoin, because I think there's value in a transaction network that is basically leaderless. I think both might actually succeed for totally different reasons. But yeah, so that's sort of what I see at the moment.
What I would say to that is, Bitcoin is still an experiment, I guess. And, all these cryptocurrencies are just experiments. But, Bitcoin is the leading experiment in all these ones. So its mistakes or, any problems by its leader or Satoshi not coming back into the project, all these things are going to be magnified because it's, the first mover advantage. But the point you brought up is valid. You brought up how they don't have coordinated leadership guiding things forward. Libertarians have a term for that. It's called cat herding. So so yeah. Trying to herd a bunch of cats together, they're not going to move. They're not like sheep. So
right, yeah, cats tend to go in a bunch of different directions.
But
yeah, and then there's the third model, of course, which I think is services like Bitgold, where it's also same as Ethereum, who's in charge, and even added layer of trust there because it's run by a publicly traded company that's on the Toronto Stock Exchange. So there are very few cryptocurrency startups that have that level of transparency. So, of course, Bitgold isn't a crypto. It's actually real gold that sits in a vault. So, I tell people in my videos that these, to me, are the three most exciting things right now. Gold ownership, Bitcoin, and Ethereum. And I think that it's really kind of incumbent on everybody who's out there who cares about this stuff to educate themselves, because the world's changing, and if you look at who is investing in Bitgold, it's a bunch of billionaires. They're backed by Soros and Eric Sprott and other billionaires. And then you look at who's behind Bitcoin, it's like Mark Andreessen, one of the billionaires from Netscape. Who's behind Ethereum, number of wealthy people who made their money in the run-up of Bitcoin prices. So I think it's kind of sad in a way that it seems obvious there's going to be some kind of big downturn over the next, I don't want to give a specific date, I have no idea, but it seems like, Alan Greenspan the other day was on Fox Business Network, and he said that there's a disaster coming. Pretty strong words from somebody who's such an establishment figure, So anyway, it's sad to me that it seems like only the rich people and only the techies and only the crazy gold bugs are going to survive and thrive whenever this shift happens. So I think it's really, part of the reason why I talk about this stuff so much is it's just good for people to be educated. All the information is essentially out there, open source. Satoshi's white paper even was just a PDF file that anybody could download and read. And to this day, if you want to get into Bitcoin, that's the first place you should start, is just read that white paper and get a feel for how it works, because that's how 98% of us got started in Bitcoin, is somebody just sent us a link to the white paper and said, hey, you have to check this out. So if I can tell my 10,000 people on YouTube, hey, check this stuff out, and if you can tell your 10,000 people, and then your 50,000 people on Twitter, and all of your iTunes listeners on the podcast, then before you know it, we're up to 50,000 people, and then word can get out very quickly. So
yeah, I really like Bitgold a lot. We'll talk about it a little bit later in the interview, but I want to switch back to Bitcoin and some of the other cryptocurrencies. Now, you've talked about Litecoin and some of the others. I think you call them copycats. Did they basically just copy and paste the blockchain for Bitcoin? Is there actually any innovations to these other coins like Litecoin and Mastercoin and Dogecoin and things like that?
yeah, I'm a big believer in free markets. So first of all, I think if you want to copy Bitcoin source code and slap a dog's face on it and then call it Dogecoin and give it a different economic schedule, make it more inflationary, make it a joke, make it fun. If you want to do those things, I'm not opposed to it, right? So what happened with Litecoin is basically a copycat of Bitcoin, but there are some differences. It's a different mining algorithm. Instead of SHA-256D, it's actually, what is it called? I study so many coins, I almost forget some of this crap. Script. So Litecoin uses the script algorithm, and aside from different mining algorithm and different mining hardware that's used for it, the main difference is they reduce the block time from 10 minutes to 2.5 minutes. So that's the core difference between Bitcoin and Litecoin, is different name and faster block time. But it is a copycat, and I don't own any Litecoin right now. I bought some when I felt that it was going up, and it did go up. But I don't own any right now because I just don't see it really doing nearly as much as Bitcoin has. It doesn't have a Coinbase and Circle supporting it. Supposedly Coinbase will support Litecoin at some point in the future, but so it doesn't have as big an acceptance network. And if you look at the daily trading volume, it's just not as useful a currency. Bitcoin has a daily trading volume of between $50 million to $100 million worldwide. So if you want to send a $50,000 transaction, or even $1 million transaction, that on the other side of that, you'll be able to sell your Bitcoin and get your local fiat currency without crashing the whole market. Whereas Litecoin, the total daily trading volume on some days is only $2 or $3 million. So if you have a big transaction that you want to push through the network, and then whoever you sent that money to wants to sell to get a currency in their own country, a local currency, then that could really disrupt the actual price of Litecoin. And so again, it's just a weak copycat. And for a while there was a place for copycats too, because it was kind of a hedge against the possible failure of Bitcoin. If Bitcoin were to fail for some reason, people would still want to use a rare crypto coin on the internet. And Litecoin, really being the second one that was launched, seemed like the logical choice. But now, as a Bitcoin hedge, it seems like many of the smartest people are just putting money into Ethereum, because they see that a real hedge isn't buying little copycats. It's buying something that's fundamentally different, but is still running on a blockchain. So.
Yeah, and a lot of the network effects that you talked about, I haven't really heard people using massive amounts of transactions for Litecoin and things like that. It was mostly my friends who were speculating on it, buying $1,000 here or this and hoping it goes up, smaller amounts. I'm not hearing stories of, hedge fund managers doing $1 million a day of trading. You can't really do that in the smaller coins without drastically, upsetting the market. In terms of your visitors to your channel, since you do cover cryptocurrencies, have you noticed that there's been a lot of of people from Venezuela and Argentina or other countries where there's problems with their, government issued fiat currency coming to your channel and telling you thank you for educating them, and that they're trying to use these currencies more in their own countries. As you know, Venezuela experiences hyperinflation, and Argentina has been basically a basket case for the last couple decades?
That'd be a great story if that's what I had noticed. But and there are a number of cryptocurrency advocates who always tell you that the real value of crypto is that it can save these people in Argentina and wherever, Venezuela, with really bad currencies and runaway inflation and unstable political systems. But the reality is, last time I checked my YouTube stats, it's first of all like 91% male, 90% male viewers, and they're mostly from the United States and Canada and Western Europe. So again, this goes back to what I was saying at the beginning with you, which is that it makes me kind of sad that the people who are going to get rich off of this one are pretty much, wealthy, educated people in the developed world who have been paying attention. It's not the people who are, strung out with student loan debts. It's not the people who are in Argentina. It's people who are very educated and are already tech savvy who are getting into this at this point, which makes me sad because that's not, I want to see a world
You can't save everyone, buddy.
Well, right.
I hear you.
And I guess also, they say that charity starts at home. So I think looking after yourself is the beginning point for whatever comes ahead. But yeah, to answer your question, no, I haven't seen much interest from those countries. And I think that Bitcoin advocates really kind of overhyped the extent to which the developing world is, and even, I shouldn't really call Argentina the developing world, but they overestimated the utility of Bitcoin as a safeguard for those kinds of situations. I think in those situations, people just go to what they know, which is gold and real estate and stuff like that.
Yeah, and people are still using US dollars in those countries. So there's a lot of older generation in those countries, from what I've heard from people telling me this who visited those countries, that they want US dollars still. Because, even though the US dollar has been drastically inflated, it's lost over 97% of its purchasing power since the Federal Reserve was created, there's still a lot of foreigners who still view the dollar relative to their own currencies as strong. So, if you're in Venezuela and you're having hyperinflation and you have to use a whole backpack full of Venezuelan money, $100 bill seems like gold to you. And, if you're an older Venezuelan, you're not as tech savvy with your smartphone and stuff, using Bitcoin, even though it would be easy to use, or Bitgold or something like that, they're probably going to trust the US dollar more at this point. So, I mean, we can't save everyone. Obviously, you do the best you can. You put out great free content to people, and you also write a paid newsletter, which is, affordable to people. But, you can't save everyone. So you can't force feed people this information. There's a lot of my old friends and family members who won't even listen to any of my podcasts, who have never listened to a single one. So it is what it is, man. But, I'm sure, I'm sure lots of people appreciate, your efforts and your hard work. I know I do. You do a great job explaining things.
Well, thanks. It's funny how things that are obvious to me and probably obvious to you and many of your listeners are just not obvious to a lot of other people. I did the research on Ethereum and put out my final issue on it. Not my final issue, but, my research issue about why I thought it was useful. That came out at 79 cents in Ether. And I wasn't on the fence about it. I told people that, from this point forward, I'm going to be more exposed to Ether than Bitcoin because I see more development on that blockchain. And now it's down a little bit today, but it's still up over 1,000% from where I put out that newsletter issue. And it's weird that some people back then, even with all the numbers that I showed in the research and the fact that I've been in crypto for 3 years, they just think you're totally full of it. They can't visualize a world where some currency increases in value by 1,000% in 5 months, but that's exactly what happened. And, you mentioned the US dollar as being this relative safe haven, which, makes sense, but as you and I know, it really isn't. Actually, the parent company of Bitgold, Gold Money, put up a video on their channel earlier today talking about the Big Mac index, how if you were to buy a Big Mac with US dollars in 1985 and then, jump in a time machine and try to buy a Big Mac today with the same amount of US dollars, you'd only be able to buy 1/3 of a Big Mac. So 67%, 66% of that Big Mac has disappeared, which means, how much purchasing power has the US dollar lost over the course of that period of time? It's crazy. Over the course of 3 decades, the US dollar has lost 2/3 of its effective purchasing power. And then, as you mentioned, if you go out a little bit further, it's lost more than 95%. So it really is not a stable store of value. It's just the least awful of the awful fiat currencies.
Amen. I don't like any fiat currency. So hopefully, in the next decade or two, we'll wake more people up and we'll be able to get people away from fiat currencies. Or at least, people only pay their taxes in fiat currencies, and they won't save any money in them then. Because it's just an illusion. You can't really store any value there and save any money there over the long term. Now, I want to ask you, since you do cover Ethereum a lot, you've called it Bitcoin 2.0 in your videos. Why do you think this way, and what innovations does Ethereum have compared to Bitcoin?
Okay, well, I guess I'll answer that. I was going to mention something else, but I can definitely answer that. The main problem with Bitcoin is that they were very security focused when it was launched, and they wanted a situation where the blockchain would continue to roll on forever, and that makes total sense to me, especially since the main purpose of Bitcoin is to just be a state transition ledger. In other words, showing a transition in state of the value of Bitcoin you hold. So it's very good at telling the world that you've just sent a Bitcoin to so-and-so and then preserving that forever. It's good at doing that, but what it's not good at is everything else. And they very specifically limited these scripting abilities within Bitcoin to prevent, some kind of malicious actor from writing bad code, putting it on the blockchain, and having the whole blockchain break, right? That was the concern. So as a result, Bitcoin doesn't really do all that much. And the way I like to describe it to people who don't know much about crypto is Bitcoin is like the butter knife or the steak knife. And it does one thing really well. It cuts through that slice of butter, it cuts through that piece of butter incredibly well, or it cuts through that piece of steak just fine. But that is literally all it does. That's all it's designed to do. Whereas Ethereum is more like the Swiss Army knife, where yeah, it has a sharp blade, but it also has a thing where you can clip your nails, and it also has, a toothpick you can pull out, and all these other features. And Ethereum has a full scripting language. It's called Solidity. That's the programming language they built. And so when you're sending Ether, you can also include contract code, and that tells the network how to treat that money. So you could have a contract that says, I'm sending Jason $500 worth of Ether, but only give it to him if his podcast is listened to by more than 2,000 people. And then, I can do it as a kind of performance bonus. So what happens is you can have it designed so it'll listen to YouTube, and it'll see the second that you go over 2,000 views, and then it will award you the money. Or you can set up different kinds of bets where you say, all right, give Jason $500, but only if Hillary Clinton loses the election. And then it'll actually scrape Google News and find enough independent sources to determine who won the presidential election. And then if your bet is correct, it'll release the funds to you. And if not, it can claw the funds back and return it to me. So just all these kinds of advanced money relationships that seem very science fiction-y, that you can now just code money to do whatever you want. And actually the co-founder of Ethereum, the way he put it is that Ethereum is programmable money in a way that Bitcoin tried to be, but simply isn't. And I think that's the easiest way to explain it, is Bitcoin had a lot of ambitions, but in the name of security, they really turned off a lot of the potential and kept it as purely a currency blockchain. Whereas Ethereum, which uses Ether as the base unit, is a global resource. It's this global computing network that you can build code on. And then when the code executes, it executes on every node around the world, which right now is about 6,600 nodes running. So you have massive decentralization, but you can have much more complicated agreements. Even saw just the other day a alpha version of a derivatives platform built on Ethereum launched. So you can build that kind of stuff.
It sounds really interesting. It sounds like that it would cut back a bunch of legal fees. That the blockchain on Ethereum would, and the other programs that you said can be coded in, instead, normally in the past, you would have to hire lawyers to do all these things like hold cash in escrow and, enforce contracts and things like that. It sounds like the blockchain, the coding could just do all of this instead of, hiring a lawyer at $500 an hour or something like that to do it.
Yeah, that's exactly what some of these developers are looking at, is those kinds of use cases. The existing legal system, the courts and the lawyers and all that, it only works for very big amounts of money. If $10 million is at stake, then you hire a lawyer and you hope you win in court, or you write a good contract before you hire somebody. But what about agreements that are only $200 in value? If I make an agreement with somebody in China or India to design a graphic by a certain point in time, even if they don't design that graphic, it doesn't make sense for me to hire a lawyer and then send them to India when the amount that's in question is only $200, right? So people could just write up a smart contract in a few minutes using one of the smart contract builders that I believe is on the way. Something a little more user friendly than writing raw code. And you just, fire up this smart contract builder and say, hey, you have to design this graphic for me by such and such date. And if you do that, you get the $200. If not, it gets pushed back to me. And like you said, it gets rid of the need for an escrow service, gets rid of the need for eventually court systems. I think eventually it's totally possible that courtrooms will be for serious stuff like rape and murder and all that. And business disputes will just be handled on a blockchain because it's orders of magnitude cheaper and more certain.
That's interesting. I'm actually a law school dropout, and I can tell you the American legal system, it's way overpriced, it's too expensive, and it's incredibly inefficient and slow. So anything that can, solve this problem, make it faster and make it more efficient, lower the cost of it, would be welcomed in my view.
Well, it's all those things, and it's also, the legal system is too subjective for my tastes, because you can get, depending on which, depending on which state and which district and which judge and all these things, you could have a totally different outcome.
Lawyers go shopping for specific judges in specific states or courts or circuits. Yeah, man, that's what we were taught. One of the first classes was how to search for the right judge in the right district and all these things, and get cases thrown out in technicalities and move them around. So yeah, it's done intentionally for different outcomes. Well, I want to ask you now about Bitgold. Bitgold, I really like Bitgold. A lot of our gold bug friends who listen to this podcast, they don't trust it. We hear a lot, if you don't hold it, you don't own it. But what I tell my listeners is, going forward, a lot of these governments, they're going to change the rules for taxing. They're doing a lot of crazy and stupid things with the economy, printing money, so many different things. Do you think Bitgold, what do you like most about Bitgold then?
First of all, I had issues with Bitgold when I first heard about it, for probably the same reasons as anybody. I was concerned about, how safe is it to give some strangers the, how safe is it for them to look out for your gold versus this whole you holding it yourself thing. But at the end of the day, this is like a very well-financed operation. And again, they're publicly traded, so there's a level of oversight, level of legal oversight that's pretty significant. And then they partnered with Brinks. So the vaults are protected and managed by Brinks, the famous banking logistics company. And it's just very, very well designed. I've been using it now since last summer. And the people who say that you don't own it unless you hold it, I guess they don't want gold to ever take off in value, because the only way you're going to see science fiction values for gold within the next couple of years, aside from runaway hyperinflation, which is possible, right? The only way you're going to see it is if gold actually becomes a usable currency again. And then you'll be able to hitch gold to the network effect, sort of as has happened with the price of a Bitcoin. The price of a Bitcoin went from, in 2010, 10,000 Bitcoins bought you one pizza, to now one Bitcoin is worth $470. That happened in the course of 6 years, and that's because of network effect. If you can get hundreds of millions of users on the internet, or even a billion people using gold as a transactional medium, that has to do something to the underlying price of gold because it's just so rare. Just as Bitcoin is rare, gold is like the OG rare commodity money. Around the world, I think it's only like 3 Olympic-sized swimming pools of gold are in existence. And if you look into the history of gold, it's been in use for more than 5,000 years actively. And if you look at how it's created, it's freaking crazy. It's not created like other elements. It actually has to be created when neutron stars collide, which are the dead cores of stars. So they have to collide in a specific way, and then that generates gold. And then some of that gold showered down on the earth through meteorites and stuff over the course of 200 million years. And that's how your gold comes about. So it's like the mining algorithm from hell, basically. And yeah, it's just this super rare element that for whatever reason, humans have always found to be a good money format. And now if we can digitize it and we can get hundreds of millions of people emailing each other amounts of gold for payroll and emailing each other amounts of gold to pay their rent and all this stuff and just using it in everyday life, that will do something to the price and the stature of gold that I don't think we've seen in a couple of generations. You know, like, it's so crazy to me, Jason, that there are these two things in the world that everybody accepts as true that just were not true for 99.5% of human history. And those are, one, this fiat currency thing is just a total invention. You know, it's always been gold and silver were money. You know, J.P. Morgan, who was one of the wealthiest bankers in the world 100 years ago, or 113 years ago, he's quoted as saying, gold is money, everything else is credit. And people have forgotten the reality of that. So fiat currencies are just tokens created by politicians. That's all they are, tokens that are notionally rare. And so we use these tokens to do things like pay each other and pay the parking meter and pay for dinner. And because it's notionally rare, that works. Because it's, you know, hard for you to earn a $100 bill, then that works. But it's not actually hard for that $100 bill to be created. It's just created by political decree. So at the end of the day, it's highly unfair and a highly distorted system where the money creation is extremely easy, but then for the commoners to get any of it is extremely difficult. So that has only existed really for the last 45 years in the kind of absolute form it exists in today, right? It was really Nixon who put the final nail in the coffin of gold as a form of money. And if you look at old dollar bills, they actually say things like silver certificate on them. You could redeem a $20 bill for $20 worth of silver. And there were similar instruments for gold. And people just for whatever reason, you know, it's been so long since that event happened. It's been so long since Nixon that people have just forgotten how weird that is, how weird it is for you to trade your time and your possessions, whether it be when you sell your house or sell your car or sell your business. We've forgotten how weird it is to not be paid in gold for those things, which is, you know, proven to be rare because it has to be created through the cores of dead stars colliding. Then it has to have the good fortune of landing on planet Earth somehow. We've forgotten that that's money. Instead, we're accepting these worthless tokens created by boring bureaucrats, boring, just dreary people, you know. And so we've forgotten that. And the other one, I've chosen not to talk about this much anymore, but to me, it seems like the drug war was another similar distortion, and interestingly, one introduced by Nixon also. So if you go back 45 years ago, you start to see the outlawing of certain psychoactive substances, the biggest one being cannabis. And what's weird about that is if you look at human history, you know, you look at the hieroglyphics of the ancient Egyptians, pictures of people with cannabis plants. And you look at, you know, all throughout history, like Shakespeare smoked weed, like it's just a part of the human experience. And then it was kind of scrubbed from the record. But that one doesn't interest me as much as the money distortion. You know, I think the money one is the easiest to fix because you don't have to pass a new law. You know, it's legal to buy gold. It's legal to buy Bitcoin. It's legal to buy Ethereum. So if enough people start buying these things and using them, it's just going to change the dynamic. And you don't have to wait for big sweeping legislation to buy gold as you would have to do to see, you know, like the end of the drug war. So that's why I've chosen to focus on this one. But I think those two distortions are most responsible for the problems we see in the world today.
gold ownership was actually banned for U.S. citizens to buy other than for religious artifacts, I think, for 40 years. So, I mean, now gold is allowed to be owned. But yeah, from 1934, when FDR started, forcing people back into the U.S. dollar, and they supposedly melted down a bunch of jewelry gold, although not every U.S. citizen turned in their gold, and they put it in Fort Knox. People were told not to own any gold and things like that. But you brought up some very interesting points there. One of the things I like most about Bitgold is I think it bridges the gap between the old school folks who like gold and our generation, the Generation X and millennials, who want to be able to pay on their smartphones. So Bitgold is kind of the convergence where your savings are protected from devaluing of fiat currencies by central bankers. So you're stored in physical metal, but then it can convert to fiat currency and you can make payments in certain things. So you kind of get the best of both worlds in that sense. And then if you want physical metal, you can take delivery. So you get a bunch of different options that way. And then it's like, it's basically a technology mobile payments platform that stores gold in the vault, and you can store it in different countries. And I think that's really good for the tech savvy folks, especially our generation, who don't want to carry around a lot of cash in their pocket because they're worried about getting robbed or whatever. And, they have their cell phone with them, and they just have a Bitgold app on, and boom, they go to the store and they convert it to dollars, and it's done.
Yeah, well, I know the founders of Bitgold. I've had them on my YouTube channel a few times now. And one of the ways they describe their system is, you mentioned that you can redeem it for physical gold. I've done that several times to test it out. They mail you these investment grade gold cubes, or you can now request, they can mail you just the major sovereign bullion coins too, like the Maple Leafs and the Krugerrands, all those. But what interests me is that they describe that redemption process as a check and balance on the system. So, if you're not happy with the way that service runs, at any point you can just get your gold and have it shipped to you. But if you look into them and you trust their financials, they have something like $70 million in the bank, zero debt, and again, publicly traded. I think their parent company is worth $320 million or something. So plenty of money to continue doing what they're doing. And that parent company has been storing gold for wealthy people for the past 15 years now without any incident, without any loss of gold or other precious metals. Their parent company actually holds silver and palladium too, and I think platinum.
Yeah, gold money.
Yeah,
James Turk and Eric Sprotter. Yeah. And Doug Casey's involved too.
Yeah, incredible brand to be able to do that for 15 years. But no, you're totally right. The kind of war on gold began before Nixon, but now we live in a different world where if hundreds of millions of people just decide to do something, then it becomes reality, and you see that with Uber, where local city councils have a lot of trouble trying to shut down Uber when so many people use it to get to work,
Yeah, even Bernie Sanders likes Uber. Who's anti-capitalist, right? And he loves it. So, although he wants to regulate it a lot, but
I gotta say, I'm really disappointed in the Bernie supporters out there. I just think such a lack of research ability or something. It's like, I'll save that for another interview with you, I guess. But I'm just not impressed. If you look at what's happening in Venezuela, we don't want to import those kinds of ideologies and those kinds of inefficiencies. I think the United States has enough problems. So
I agree with you on that. But think about this for a second. And, you brought up why people don't like gold. Well, I was going to talk about people being brainwashed in business school and, their economics professors. One of the things is a lot of these kids who are Bernie Sanders supporters or like communism and Marxism, they're not dumb people. A lot of them are actually very book smart. They got A's on all their classes. They memorized the textbooks and things like that. They just believe in the specific ideology that, the Soviet Union screwed up. Oh, Venezuela screwed up. We can do it better. And, the evidence in reality is that it can't work no matter what happens. The Soviet Union had prices, and there was all these other, Chavez had, massive amounts of oil reserves, and the country is still collapsing. There's still electricity shortages in a country with one of the most largest oil reserves in the whole world. So it's just unbelievable, though. But yeah, we'll save that for another discussion. I want to wrap things up here, David, because I know you have some obligations later, and we're at almost 45 minutes. So I want to thank you for your time. And if our listeners want to follow your work, sign up for your newsletter, check out your excellent YouTube videos, how do they do so?
Yeah, easiest way to find me is just go on YouTube and search for my name, which is David Seaman. Seaman. And then my channel should pop up and people can explore and decide if my content is up their alley. And then I also tweeted out from my Twitter account the promo link. If your listeners want to save money on the newsletter, there's one just for them. So normally it's 30 or 40 bucks a year. That link gets them in for $21.99 for the next year. And that's where I put all my currency research and cryptocurrency ideas. But yeah, thank you so much for having me on, Jason. And this went by fast, so I hope we can do another one, or I can have you on my channel sometime. I would love to do that.
Sure, sure. I'd be happy to come on your channel. I enjoyed this discussion. I think you're a really smart guy, and I've read 5 or 6 Bitcoin books, and a lot of the people that have written them are not as good as explaining the terms as you. So I don't know if you're planning on writing a book. Maybe you should do an audio book or something like that and provide graphs. But something to think about. Then maybe you can write your own cryptocurrency book.
Yeah, well, thank you. And what's one final thing about Bitgold? It's funny because it didn't really fit my model of how I wanted to see the world turn out, because I wanted to see fiat currency just get completely replaced by this crazy network effect that cryptocurrency will have one day, right? Because it is, at the end of the day, extremely rare, extremely difficult to create new units. You need to have specific hardware. And even then, it's not a guarantee that you'll actually mine that block. There's a probability element to it. So it's difficult to get more of, and it's so rare that once a lot of people start to use it, the price will just go through the roof, in my personal opinion. Not financial advice, but that's based on the numbers. And the further out you go, the more rare it becomes, because the mining reduces. The block halving for Bitcoin is right around the corner, where the number of coins generated with every block that's solved is going to be reduced by 50%. And there will be similar scale downs for other currencies depending on their schedules. But yeah, so I was not looking at gold at all. But when I finally came across Bitgold and started researching gold, I sort of saw that gold has already gotten to where crypto is trying to get. You're talking about this tiny $8 billion market for cryptocurrency versus an $8 trillion market for gold. And if we can get it appified and get it as something as easy as PayPal, which is their goal. I mean, their CEO is the former head of PayPal Canada and was one of the earliest people at eBay. So they do have a high level of ambition to actually get gold out there. And I'm supportive of that. Anything that is truly fair money, I'll support. And the fairest, I know we're out of time, but just as I put this high level of discipline into researching the NSA, and researching drone programs, and before that it was some other civil liberties stuff. I really put all of my energy and connections and focus into figuring out money, and gold is going to be a big piece of that puzzle for sure. So.
Amen, brother. Well, I want to thank you again for your time, David, and we'll definitely have you back on again in the near future.
Great. Thank you so much.